Hello, friends. Last week, the richest man in India, Mr. Gautam Adani, was the target of serious claims made in a report by the American firm Hindenburg Research. As a consequence of this report, the Adani Group of Enterprises, an Indian conglomerate with interests in ports, commodities, and energy, had losses totaling $65 billion within the next 3 days. Hindenburg is so confident in its findings that it has publicly dared the Adani firm's legal team to sue Hindenburg if they can, and they are ready to defend themselves in court. But if the projections in the report have incorrect information, Adani will not need to bring a lawsuit as a form of retaliation because Hindenburg will be forced to suffer significant losses as they are actively shorting the Adani stock. Many reports against Adani were published over the last few years. Many from Sucheta Dalal to The Wire journalists outlined how shady entities from Mauritius were manipulating Adani stocks with opaque ownership. So why did Securities and Exchange Board of India (SEBI) never investigated Adani despite so many reports? Turns out, Adani's son's father-in-law Cyril Shroff is a member of SEBI committee, and Cyril's firm Cyril Amarchand Mangaldas is also the main lawyer of Adani Group. And that's not all. Cyril Shroff's law firm Cyril Amarchand Mangaldas (CM) is also the main lawyer for Adani Group. It was CM who were advising them on the recent failed FPO, and also hired to potentially take action against Hindenburg. Today, almost everyone knows who Adani is, but most of us would have heard the name Hindenburg Research for the first time. So, let's understand who and what is Hindenburg Research, and why is their report so significant. This company was established in 2017 by Nate Anderson, who was a financial analyst before this. This company claims to research things that are not easy to find out, uncovering hard-to-find information from atypical sources. The company's name is based on the popular Hindenburg tragedy that took place in 1937, killing 35 people. Anderson compares the stock market disasters to this disaster from 1937, saying that all of them are man-made disasters. The purpose of his company, in his opinion, is to prevent Hindenburg-type disasters from happening in the stock markets again. This is why, friends, in addition to being a financial research company, it is an activist company, as well, which they carry out through short selling. Normally, as a regular investor, you invest in a stock with the expectation that the stock price of the company would go up, and then you will make a profit. While short selling is exactly the opposite, where you bet against the company doing well. When you think that a company is overvalued, you invest with an expectation that the stock price of the company will fall, and then you will make a profit. Hindenburg claims that they carry out their financial research to expose the frauds committed by the companies, and the company that they expose, they would invest in it, by short selling. Short selling is risky since there's no upper limit to your losses. In traditional investing, suppose you invest $100 in Apple stock, the most loss you could suffer is $100 if the value of the stock falls to zero. But while short selling, you are betting on the value of the stock falling, but if it increases instead, there is no limit to the price it can go. It can go up by 100%, 200%, 300%, or even 1000%. And hence short selling is much riskier than investing normally in the stock market. Now, let's understand the allegations against the Adani Group. In the Adani Group, 7 major stock-listed companies are spread over a large number of sectors. Adani Green Energy generates renewable energy. Adani Enterprises is engaged in coal mining and trading. Adani Transmission is engaged in power transmission. Adani Total Gas for gas distribution. Adani Power for coal-based power generation. Adani Ports for ports. And Adani Wilmar is a joint venture with Singapore's Wilmar International. Up until recently, the operations of the Adani Group weren't so large-scale or diversified, and they were mostly limited to Gujarat. But they saw exponential growth over the last few years that propelled Adani to become the third richest person in the world. His net worth reached $120 billion, out of which over $100 billion was just created in the past 3 years. At the time of making this video, he slipped to the 10th position, with Adani Group losing close to $100 billion. This is a 106-page report whose title, The Largest Fraud in Corporate History. Hindenburg Research claims that they have invested more than 2 years in this research and have made a large number of allegations against the Adani Group. Money laundering, stock manipulation, accounting fraud, corruption, theft of taxpayers' funds, and creating offshore shell companies. They claim that companies of the Adani Group have been the focus of 4 different government fraud investigations. In this report, it is said that Gautam Adani's younger brother, Rajesh Adani, was accused by the Directorate of Revenue Intelligence in 2004 to 2005. Allegedly, he was arrested twice for forgery and tax fraud. But later, he was promoted to the managing director of the Adani Group. The next accusation was on Gautam Adani's brother-in-law, Samir Vora. It is alleged that he was the ringleader of a diamond trading scam. He was later promoted to the executive director of Adani's Australia division. There's also an accusation against Gautam Adani's elder brother, Vinod Adani. Allegedly, he went to various countries to create offshore shell companies, and was engaged in money laundering. Hindenburg has identified 38 offshore shell companies in Mauritius that are controlled by Vinod Adani or his close associates, and other companies in several tax havens such as the Caribbean islands. Several of these shell companies do not even have a website, whereas some have websites populated with just stock photos. There are no employees in these companies and sometimes not even proper addresses. Hindenburg claims that they had filed several RTI applications with the SEBI to find out whether the offshore funds were a part of the investigations or not. They claim that there's a Cyprus-based company, New Liana Investment. At one point, 95% of its portfolio was the shares of Adani Green Energy. This company had invested $420 million in the shares of Adani Green Energy, and this company was operated by the company Amicorp Incorporation Services. And apparently, this is the same company that had played a key role in the One Malaysia Development Berhad international fraud scandal, where $4.5 billion were stolen from Malaysian taxpayers. The report has cited several such examples, and I have provided the link in the description for a detailed reading. Now, let's see how the Adani Group responded to this report. In response, on January 25, the CFO of the Adani Group said that the timing of the report shows that it was published with malicious intent by trying to undermine the reputation of Adani Group and its public offering. On January 26, the head legal expert of the group threatened Hindenburg with legal action. Again on January 27, the Adani Group published a presentation with the title, Myths of Short Seller. Also, they claim that they have stable credit ratings and that the companies of the Adani Group meet various regulations as specified by the government. And finally, on January 29, Hindenburg's 106-page report was countered with 413 pages of Adani's report. In this, Adani Group has claimed that there was a selective and manipulative presentation in the public domain to set a false narrative. Additionally, they claim that the report undermines Indian institutions and that it is an attack on India. One question arises here: why is Hindenburg Research so confident? Why do they have so much faith in themselves? This is because of their past track record. Before the Adani Group accusations, since 2017 Hindenburg has targeted about 16 companies. 1. They published a similar report in September 2020 about Nikola, claiming that the company was lying. The founder and executive chairman of Nikola resigned from the company, and 2 years later, Nikola's shares fell 71%. 2. In May 2020, Hindenburg targeted China Metal Resources utilization, saying that there were several irregularities and fraudulent wrongdoings in the company. After that, the shares of this company tanked by 90%. 3. In June 2020, Hindenburg wrote about Genius Brands. Its share price was $6.86 per share. After the report, the price fell to $1.50 per share within 2 months. As per a Bloomberg report, about 30 companies that were targeted by Hindenburg, on average, the day after the publication of the report, lost about 15% of the value of the stock. And over the next 6 months, on average, their stocks fell by 26%, and several underwent investigations as well. So, the track record of Hindenburg Research LLC is quite successful, and hence as of today, the Adani Group has lost $118 billion in value a euro. A 50% decline a euro. Since January 24. Adani claims that 65 questions out of the 88 are such that answers to which are publicly available. If the financial statements are read carefully, and the stock exchange disclosures are checked, they can easily find the answers in the public domain. And 18 of the questions are about public shareholders and third parties, so that has nothing to do with the Adani Group. And the remaining 5 questions are baseless or based on imaginary fact patterns. Hindenburg's response to Adani's response was that the Adani Group was claiming that the data is publicly available, but they haven't properly answered any questions. They claim that Adani is using nationalism as a shield to escape these questions. So friends, what do you think? Is Adani trying to hide his wrongdoings with the support of the Indian government, or will this time Hindenburg research fail to cover its shorts? Do comment your intent below. Thanks for watching.